Hello everyone, welcome to The Lord of the Coins. This will be the first part in the series of Mastering Price Action. Mastering price action will allow you to understand how the market moves, while giving you a really good feel for its ebb and flow. This knowledge will help you easily identify areas of interest so that you may accurately and precisely plan your own trades. The concepts that I'm about to teach you is exactly how I managed to have over an 80% win rate trading the markets. But before we get started, I want to give a quick shout out to my Discord, as the document for Mastering Price Action is available here, absolutely free, alongside a great community of like-minded people. I also do real-time trade callouts, just like these. As you can see, we have trades that were hit today. Alongside these, we also do chart reviews, we do 1 to 10K challenges, daily market updates, and more. So make sure to join and check it out. The first part of the series is liquidity. It's a very important concept to not only understand, but be able to identify visually when you see charts. So liquidity is fuel required to move the markets. It's a measurement at which an asset can be bought or sold at a current price. And to understand liquidity, you must be able to visualize the area where it is likely to exist. This is a key skill required in order to identify potential targets for price action. So we'll go over several visual examples of structural liquidity. First example here, you see that we have a higher high and a higher low and a higher high. In this, people are going long on this pullback here. So this is an area where there's likely stop losses and limit orders to buy. So in this general area, you can expect there to be a lot of liquidity here. And vice versa, when you have a lower low, a lower high, another lower low that's forming, you can expect people to buy on this pullback. So now you'll have a general area of liquidity right above this pullback right here. Next is relatively equal lows. When retail trades this, they'll trade this as a double bottom, thinking that this is support, and they'll place their stop losses here, hoping to, win a trade right here off this double bottom. But what you have to see is that instead of seeing the structure, see what the structure produces. It produces a lot of liquidity right here. A lot of retail will go long here, expecting the price to move up and to not get stopped out here. Or they'll risk it, say, oh, this is a double bottom pattern. Let me buy right here on the second bottom and place my stop loss right underneath. But this is the wrong idea, because now you just given your money a target for the market makers and smart money. This is how smart money market makers make a lot of money in the markets. It's by taking your money by stopping you out. And the reason also that I say relatively equal lows, not just equal lows, is that structures like this, where the lows are kind of staggered, also produce a lot of liquidity. The same thing goes for equal highs. People will trade this as a double top and end up shorting the market here, placing their stop loss right above, or limit sells. This gives also a lot of liquidity for market makers to take. And the same concept applies to these relatively equal highs. Now with trend lines. A lot of times retail, when they're trading, they'll trade with the trend and they'll draw their trend lines. But what you have to realize is when they're drawing those trend lines, they're drawing an area literally where there exists a lot of liquidity. And they'll draw their trend lines, and maybe on this pullback here, they will buy and set their stops, hoping to maybe scalp the market. But this is, again, the wrong idea. This is where a lot of liquidity builds up, and this is how a lot of retraces in the markets happen. Because smart money and market makers, they love seeing all this liquidity right here. It'll come down and sweep it. Same thing with bearish trend lines. On like a break of market structure, a lot of people will go short here. Or maybe on the second one, they'll try to scalp and go short here. Same thing applies, there'll be a lot of liquidity above here. Ranges are also very dangerous to trade as well for retail, as either when they'll expect the price to go up or down, they'll place their stop losses on the bottom or the top. Or if retail is just trading the range, they buy in here or they sell a short here, they place a stop loss above, hoping to maybe just trade the range. But this also produces twice the amount of liquidity for smart money to take. So these are all the structural liquidity that is really good to visualize. But of course, when you see actual candle charts, it does not look this clean. So we'll go over a few examples of real life structural liquidity. So we'll go over some examples on Bitcoin. So this is price action that happened about 2 weeks ago, Sunday, October 2nd. As you can see, we have a bearish trend line right here. Relatively equal lows, relatively equal highs, more relatively equal highs over here. We have another bullish trend line and a structural low. As you can see, all of these market structures, so when you're trading this, you can expect a lot of these to get swept. So right here, everything on top, we had a liquidity sweep right here. And then everything on the bottom, we had a liquidity sweep right here. So being able to visualize this bearish trend line, so if we were to draw this out, we'd have a bearish trend line like this. We'll go down, relatively equal lows, relatively equal highs. We'll also have a bullish trend line right here. And then we have these 3 relatively equal highs. And then we have a liquidity sweep, everything up top. We create the structural low. Then we have a liquidity sweep, everything at the bottom. So if you're used to seeing these line charts, a good skill to practice is to draw these out and really visualize exactly what kind of structural liquidity you're looking at when you're looking at these candle charts, as it'll help you understand, what is going to get swept and what isn't. A good concept to have is that the more relatively equal highs or the more relatively equal lows, pretty much when you look at these structural liquidities, where you can see that there's more liquidity is more likely to get swept. So this is another example, and this was on Bitcoin also a couple weeks ago. And as you can see, if you're in the Discord, we actually traded this. This is Wyckoff distribution, where we had accumulation, we had markup, we had distribution, and then we had markdown. And as you can see, the markup candles and the markdown candles are very big. And finding entries and exits into these trades are actually, it's very simple, and I have other videos explaining this, but if you want to learn it more directly, make sure to join the Discord, as I'm always in there. So there's a lot of the community members, and we're all here to help you. So when you see this, retail sees this as support, and maybe sees this as another layer of support, as we found some, quote unquote support here before you push it up. But the better way to visualize this is as liquidity. It's as money. So retail traders will treat this as a support, and that support then is broken intensely by the market makers, claiming all that sweet liquidity gifted by retail. This is because retail traders, they set both buy orders and stop losses in this area, planning to go long. So if they don't understand the idea of Wyckoff distribution, there might have been a lot of people who went long right here, assuming the price to moon. But that is exactly the opposite of what happened. So if you understand this, there's a lot of distribution that's going on here, and a lot of accumulation of liquidity on both these areas right here, where retail thinks is support. And as you can see, we have giant sweeping candles. Let's sweep up all this liquidity. Let's now look at this last example. We have accumulation range right here. This is another idea that I teach in my Discord, which is accumulation, manipulation, and then distribution. So this is also something that market makers really love to do, as when you accumulate a range like this, a lot of liquidity builds up on both sides. And smart money will wait for retail to accumulate their stops, limit buys, and their limit sells on both sides of the range. And the longer it accumulates, the bigger and volatile the move that market makers will induce. So once you have this range that is forming, you can definitely expect price to wick both sides, claiming liquidity on both sides. So you have this liquidity sweep on the bottom, and then a liquidity sweep to the top. And if you're a day trader and you like to scalp, these are great scalps. So if you're able to catch this, this is almost 8% on move on Bitcoin, which is massive. So pretty much what retail does, or what market makers do, they give time for enough liquidity to build up to fuel their movement of their smart money. And they just sweep both sides, and once the board is clean, you can see the true direction of the market. So after the board was cleaned, you can see that we do have upwards movement here. And since Bitcoin is coiling right here, we actually are having more accumulation. A lot of times after these liquidity sweeps too, they form a range. And in these ranges, you'll have a value area high, and then you'll also have a value area low. So once these ranges form, this is something that you are also able to trade. Whenever it's in the value area high, you can find a good entry for a short position. When you're in the value area low, you can find a good entry for a long position. But this is a topic for another video, so we'll get rid of those. Right now, we're just trying to understand liquidity and how liquidity is swept. So I hope this helps you guys a lot, as being able to visualize these liquidity patterns is really helpful in understanding what price is going to do. So if you go to over here, where Bitcoin hasn't shown its move yet, you can see that a lot of the liquidity, so during this accumulation, a lot of the liquidity up here has been swept. If you actually zoom in here, you can see that, let me get my highlighter. You can see that all the liquidity here was swept by this wick right here. So now we have liquidity on both sides here. You can see that we had manipulation right here, wicking out everything, all the liquidity over here. And then we had a quick move down, grabbing the last liquidity that's right here. Market makers will literally take all of your money. And after this accumulation, manipulation, then we had distribution. So we have markup, back into distribution. This is another Wyckoff distribution into markdown. So now all the liquidity here, all the liquidity right here, oh, why is that white? Right here, was now swept by this move. So you can see that understanding where liquidity is will really give you a good idea of what price is going to do. So now that that has happened, you can kind of understand what Bitcoin's next move is going to be. There's a lot of liquidity that we haven't grabbed down here or up here, or down here. So in my opinion, the more likely move is that we'll see more down moves. The confluence that I have with that is that we also formed this liquidity sweep, forming that range that I showed earlier, and we haven't really broken into the bottom portion of the range yet. So a lot of people built up their shorts here. We're going to go down, and then afterwards we're going to keep sweeping. And a lot of times when accumulation happens like this, you end up forming lower highs and higher lows. What I mean by that is that we'll form lower highs, lower lows, until it coils enough for another manipulation move. I really hope this content helped you guys, as understanding liquidity was the very first key to my success in trading. Being able to visualize where liquidity is really gave me an edge in trading the markets. If you guys have any questions, make sure to leave a comment down below. And if you guys enjoy this content, make sure to leave a like, a subscribe, and ring the notification bell, as a lot of my content is usually time sensitive. So yeah, make sure you guys do that and join the Discord, as we're all really friendly. We're all here to just become better traders together. So yeah, if you guys have any questions, leave a comment, or you can join the Discord and ask me there directly. I'll see you guys next time.